Hello and welcome to the Hurst Trading Room. This is our first video update for the year 2013. It is Monday the 7th of January of the year 2017, and so welcome to the Hurst Trading Room. And as always, I need you please to make sure that you have read and understood these disclaimers before we move on and take a look at the markets. Now, before the festive season, before Christmas and New Year, I published a video update in which I said that over the festive season I would not be entering new trades because the festive season is always a difficult time to trade because cycles keep moving the prices of financial markets even though we are taking a holiday and taking time off to be with our families or whatever it is that we're doing. We are not able to trade on Christmas Day and on New Year. And this year, because Christmas Day fell on a Tuesday, and of course New Year also fell on a Tuesday, it was particularly difficult because there was a weekend, Saturday and Sunday, followed by a day of very light trading, Christmas Eve and New Year's Eve, followed by a holiday, and then a week when everybody tried to work out what was going on in the markets. And so we did indeed see a lot of volatility and some really unexpected price action in the markets over the festive season. And so I was pleased not to be entering new trades, certainly between Christmas and New Year. Let's quickly take a look in the summary video at what happened to our trades. As you know, before the festive season, I was in a short trade in the S&P 500. It was a D category short trade, and we entered it at this level over here. And in the video that I published before Christmas, I mentioned how both T1 and T2 were taken out in the very unusual price action on that Friday morning in the overnight trading. What actually happened was that in the week of Christmas, price did come down to those levels anyway to sort of complete the cycle shape, if you like. And then, of course, over New Year's Day, it gapped up tremendously, and of course that would have been our E category long trade, which I certainly did not enter, and I very much doubt that any of you did, because it was a trade that would have been entered on a public holiday, and so the worst possible time to be entering a trade. But that nevertheless counts, of course, as a trading opportunity. That was our E category trading opportunity, but it was an opportunity that we would have missed. It wasn't possible to take that. But something interesting happened with our trade 3. Going into the festive season, I mentioned I would not be entering new trades, but I would, of course, be monitoring the open trades. And we had an open trade on the S&P 500, and so the stop loss on that S&P 500 was jumped right across. I've drawn so much, let me clear some of that drawing. The stop loss would have been at the level of the 3-bar trailing stop, which I think was over here. And of course, that stop loss exit point was jumped over on New Year's Day. And so, of course, that's a warning to all of us. You've got to be very careful trading around holidays because prices can jump across your stop loss levels, which is why we speak about theoretical risk. You might be taking more risk than your theoretical risk because, of course, the markets can jump over those levels, which is what happened on New Year's Day. Nevertheless, this was a profitable trading opportunity because of our T1 target and our T2 target, and so we did nevertheless make a small profit out of that trading opportunity. The E category trading opportunity we missed, and the next trading opportunity in the S&P 500 will be an F category short trade as price comes down and crosses below the FLD, which of course I think it will do. And we can take a look at the cycle shape of the current 80-day cycle. And that's what it looks as if though it is going to do. We expect, of course, an M shape. So that's what it would seem is happening in the S&P 500. Something else very interesting happened in the S&P 500, and that is that the analysis changed that Sentient Trader was doing by default. And if we take a look at the default analysis and zoom back a little bit, you can see that what Sentient Trader is now doing in this analysis, if you don't pin any troughs, if you just let Sentient Trader do its own thing, what it is doing is it hasn't, of course, moved the 40-week cycle trough. That's still over there, but it has moved the 20-week cycle trough. Instead of placing it there, it's moved it back to September, to a position that we were considering as an alternate analysis towards the end of last year in October, November. We were considering that as a possibility. I don't think this is a very good analysis personally, but I am keeping an eye on it. When Sentient Trader changes the analysis, I let it do its thing, and I then create another chart where I monitor the analysis that I prefer. So I'm keeping an eye on this analysis. In fact, in terms of trading, according to the FLD trading strategy, it makes very little difference to the trading that we are doing, and the reason for that is because this trough over here in the middle of November, according to this analysis, is 80 days, as you can see. And so we get exactly the same trading opportunities. A category, B, C, D over here, and E over there. So our next trading opportunity, according to this analysis, is also an F category short trade. So that's an example of why trading using Hurst's cyclic analysis and the FLD trading strategy is very robust. Even when you have two different analyses, very often the trading decisions you're making are the same. Take a look at the detailed video about the S&P 500, where I discuss in more detail the difference between these analyses and the trades that you would be taking. I discuss that in more detail in that video. Let's take a look at the Nasdaq. The Nasdaq is in a very similar position really to the S&P 500, and you can see that a fairly similar thing happened to it over the festive season. We were in a short trade. In fact, this was an F category trade, and in the detailed video about the Nasdaq I discuss why this was an F category trade as opposed to a D category short trade, and what it means to what's happening now. I discussed that in some detail. As you know, before Christmas, our T1 target, that's our entry price for this short trade, our T1 target was taken out on the bar of entry, and our T2 target was taken out in the following week. That's after Christmas. That was, I think, on the Thursday following Christmas. And then, of course, our stop loss was moved to the break-even level, and it was we also started implementing the 3-bar trailing stop. And when the market closed on New Year's Eve, our 3-bar trailing stop would have been over there, and again the market jumped right through that stop. So another warning about trading over holidays. You've got to be very careful. And in fact, if you'd really had your wits about you, you probably would have exited on New Year's Eve as you saw the market sort of rushing upwards. You didn't want to go into a holiday with a bullish market and a short trade. Okay, what is our next trading opportunity in the in the Nasdaq? I believe that the next trading opportunity is also an F category trading opportunity, and that is because I think that this is probably not, in fact, the 40-day cycle trough. I think that more likely is that the 40-day cycle trough is over here. I discussed that in the detailed video about the Nasdaq. So therefore, the next trade that we're expecting in the Nasdaq is the F category short trade. So we'll be looking out for that. Now, the euro to US dollar has been very interesting. We were still in a long C category trade when we went into the festive season. We had only trade 3 open because, of course, we exited. There was our entry price, and there was T1, and here was T2, somewhere up there. And so we were implementing the 3-bar trailing stop and also watching the 20-day FLD, of course. And so we exited from trade 3 as price came down and crossed that 20-day FLD. I did not enter a short trade because it did this just a day or two before Christmas, and so I was not interested in entering a trade a day or two before Christmas. So we exited from that very profitable C category trading opportunity. Then something really interesting happened in the euro to US dollar, and that is that price in fact tracked along the FLD, as you can see over there. Now, that is not what we expect between a D and E category trading opportunity. We don't expect that to happen, and so we have to ask ourselves what it is that is really happening here, and I discussed that question at some length in the detailed video about the euro to US dollar. In fact, what I believe has happened is that we have seen the 40-day cycle trough, and that it might have occurred over here or might have occurred a few days earlier, and therefore the D and E category trading opportunities have happened and we missed them. Doesn't matter, it's not the end of the world. If you miss a trading opportunity, there are many more around the corner. I believe that the euro to US dollar is presently in an F category short trading opportunity, which of course we missed, but that doesn't matter. And I'm not going to be entering a long trade when price comes up to the FLD, because I suspect that will be a G category interaction. So therefore we're not in a trade in the euro to US dollar at the moment, and I'm not standing by to enter a trade either. I'm stepping back a little bit. The picture has become a little bit murky in the euro to US dollar, so I'm stepping back and not entering any trades. I do discuss in the detailed video about the euro US dollar the possibility that this trough here is a late trough of the 40-day cycle. I discussed that possibility, and I discussed the reasons why I don't believe that is true. But it's not impossible, but it's very unlikely, I believe. So take a look at the detailed video for that discussion if you think that that is what might be happening in the euro to US dollar. Let's take a look at the British pound to US dollar. The picture in the British pound to US dollar is much clearer than the picture in the euro to US dollar. And in some ways it's clearer as well than the picture in the US stock markets, which is why I find it really useful to analyze and trade these markets. And here is what I think is happening. Before the Christmas break, we were in a profitable C category long trading opportunity. Here was our entry price. T1 was hit the next day. T2 was hit the next week over there, and we exited from that trade 3 at the end of that week over here at the level of the 3-bar trailing stop. So that was the end of our profitable C category trading opportunity. We would then have entered into a short D category trade, and of course I didn't, because it happened on Christmas Eve. And as I've mentioned several times already, I don't enter trades near to Christmas. So that would have been our D category trading opportunity. It's not a perfect opportunity. It would possibly have hit T1. That's a question mark. Maybe have hit T1. Maybe it wouldn't have even got that far. But what happened after that, of course, was the price crossed back up above the FLD in what was probably an E category trading opportunity, and that is a really perfect FLD and price interaction, an E category interaction. As you can see that price comes up from the trough, crosses the FLD over there, bounces almost exactly perfectly to the target. That would have been the T2 target, of course. Again, this is not a trading opportunity that I would have taken, because it occurred between Christmas and New Year, so I wouldn't have entered it. But it is a really good example of what looks like a fairly ideal E category trading opportunity. What follows that? Well, of course, a short F category trade, and so that was a trade that I did enter, because we had time to catch our breath after the New Year celebrations, and so we entered into a short F category trade. That's our entry price level. T1 was hit the next day, so we immediately reduced our risk to 1/6 of the risk that we took when entering the trade. So we're in a really good situation in the British pound to US dollar now, in a short F category trade, where we've taken a small profit, our trade 1 profit, and as you can see, our trade 2 and trade 3 are still open, and they're still running a profit. Our T2 level is down here. So we're looking at price coming down to this level, at which point we would exit from our trade 2. What might be happening? Well, price might be coming back up towards this FLD. That would be, in my opinion, a G and then H category interaction. Obviously, we monitor it all the time. We have to watch it every day, so we'll be seeing what will happen. Is it impossible that that this trough over here is actually a trough of the 40-day cycle. Is that impossible? No, it's not impossible, and in the detailed video I discuss why that's not impossible, but why it is unlikely. And I believe that the picture in the British pound to US dollar sheds a good deal of light on the analysis in the euro to US dollar, and also gives us a little glimpse of what might really be happening in the US markets, which are feeling very distorted at the moment with that tremendous jump over New Year, and then they went nowhere. So I think the British pound to US dollar gives us a glimpse of what is really happening in the cycles. We've got some nice clear cycle action happening here in the British pound to US dollar, and here is the shape, I believe, of the current 80-day cycle. Of course, this is a projection. It looks like a really good M shape. So I am looking at the British pound to US dollar coming down a little bit further. That concludes our summary video for today, the 7th of January 2013. And if you have any comments or any questions, please pop them into the comment box, and I look forward to seeing you later this week if there are any updates to be made later this week. Otherwise, next week, Monday the 14th of January, I'll see you again in the Hurst trading room. So as always, profitable trading.